Hello traders, Gary Wagner here. It is 11:45 in Honolulu, 5:45 in New York on Wednesday, 19th day of October 2022, and this is the Daily Report for Gold and Silver. Statements by multiple Federal Reserve Bank presidents confirmed that they're going to continue their extremely aggressive monetary policy, moving Fed funds rates higher throughout the year with their goal of 4.5 to 4.75%. That took both the 10-year notes and 30-year bonds higher. We are looking at the 10-year note futures. They gained 3.23% and are currently yielding 4.127%. The same with the 30-year bonds. They gained 2.61% with a yield of 4.126. That in turn took the dollar higher. The dollar itself gained about 0.75% or 84 points and is currently at 112.835, which in turn pressured gold lower, with December gold futures down $21.50 or 1.3%, currently fixed at $1,634.30. That is this on our daily chart. You can see the low that came in approximately 3 weeks ago at 1621 being the next target if gold continues to trade under pressure. Silver declined by 1.05% or approximately 19 cents, with the most active December contract currently fixed at $18.40 per ounce. There is no doubt that the Federal Reserve continues to pressure both U.S. equities as well as the precious metals markets as their campaign to snuff out inflation involves raising rates at a very, very aggressive rate, 75 basis points on the last 3 FOMC meetings, and confirmation pretty much by 2 Federal Reserve Bank presidents yesterday and today saying that they intend to do the same thing and to end up with interest rates between 4.5% to 4.75%, which is precisely what we have been projecting based upon the FedWatch tool by the CME. This in turn took the dollar higher. The dollar gained about 0.75%, and we'll look at that in a second. But we are looking at a daily chart of December gold futures. We can see that the sell-off today was significant, giving up about $25 to $30. You can see that here. And now we're very close to these lows that came in last week of September when gold actually tracked down. I believe it was $1,621 per ounce. We are definitely at the bottom of the range. We haven't seen prices like this for years. If we go ahead and compress our chart, what you'll see is that we have to really go back in history to around April of 2020, which is the last time we saw gold priced at this area. And so in terms of technical numbers that we're looking at, my concern is where we could find support to the downside. You can see that when it did break back in April of 2020, it was a major break and it was far below 1600. We'll pull up a weekly chart to look at that. But right now we want to see if it will hold 1620. That could get broken quite easily if in fact the Fed goes through with their announced rate hikes of 2 more concurrent 75 basis point rate hikes, one in November and one in December. And we'll take a look at where support could fall in. But we have to address the fact that this is a market that is trading off of fundamental events. And as such, as long as the fundamentals dictate lower or stable or confined gold prices, that's what we're going to see. As I said, gold is currently trading at $1,634 per ounce. Traders, I've just put up a very long-term weekly chart of the continuous contract of gold futures. It does have a fib retracement starting from the end of a multi-year correction after gold traded to the first of these record highs at $1,920, middle of 2011, and then after many years traded down to this low at the end of 2015, beginning of 2016, at about 1,040, up to the all-time record high of 2,088. When we do that, the current low that we have been looking at, as I said, is 1622. We're currently at 1634.10, so very close to that. And on a technical basis, we do have this one top that came in, and that also matches with a 50% retracement. It's not a Fibonacci number, but it is a retracement that many traders use and have found that to be a valuable level. And that would be a retracement from this major move we have seen from 1,000 to 2,000 in gold and then retracing down. So if we cannot hold this key area of 1620 to 1622, the current low, really what we're looking at is about $1,570 as the first place that we would find some sort of technical support. Therefore, traders, we are going to remain flat or neutral with a bearish bias. This has been Gary Wagner, wishing you as always good trading. We will talk to you tomorrow for the next daily update and review. Bye-bye.